Hi, it's Wayne from truthaboutmortgagerates.com here with an update now that the summer's over. We get back to the regular schedule. We're looking at probably 2 to 3 updates a week to let you know what's happening with mortgage rates and how it all factors in the economy and real estate. And big news now, Fannie and Freddie. Big update. We talked a couple of months back when the news first came out where the government may be taking over, kind of see how it was going to play out. Well, it now has, I guess, the next stage of what's playing out just happened over the weekend, and they're now officially taking them over into conservatorship, where it still can go back to being independent. And again, the big part of seeing how all this is going to play out is exactly what happens with the housing market, to see really the next step that go on with this and how Fannie and Freddie are going to look 6 months from now, a year from now, 2 years from now. Chances are they're going to look different, but exactly what that's going to look like, really a lot is going to depend on what goes on in the housing market. The more losses there are, the greater chance that things are going to look much different. And everybody's going to kind of just be happier if there are less losses, and it just makes people worry less about the fact of whether is the government going to cost them money, they're going to have to bail them out, do all this stuff. But I'll come back to that in a moment, because I want to show what led up to all of that and what is going on. What we saw going back into July and into August, the rates really moving higher based on a couple of things. Number one, inflation. We had in July oil spiking up to over $145 a barrel, really causing major inflation concerns. It was seeping into every other part of the economy. And since we have now seen them come down, and it was flirting down with a level of $100, today it's just over $100 ending the today's trading. And that inflation concern is what we're moving rates up. Now, couple that with investor lack of confidence, really in mortgages, in real estate. It was also shown by where overall rates were. Mortgage rates were heading up into the high sixes, but where treasury rates were actually moving down, and actually moving down to levels that really hadn't seen since the beginning of this year. So the spread, we call credit spreads, we're getting wider and wider at really historical levels. And whenever you get something that's going to get that wide, usually something gives, because one of those investments looks cheap comparatively because that the rate of return is so much higher, and that's what was happening with mortgage rates. Now, we did start to see from about the middle of August, starting to see rates coming down a bit, come back. But still, spreads were very, very high, and investor confidence was still very low. And that's one of the things that precipitated the move for Fannie and Freddie. Were finding that they were big bond investors and also foreign entities that were buying bonds, saying, hey, no more. We've had enough. We're not doing any more unless someone comes in and does something here, basically the Treasury. So finally, that was one of the things that precipitated the move that they had to make, because all of a sudden, if you don't have money else coming in buying, and rates going to continue to go higher and higher. And that only makes the real estate market worse. And really, our economy here, now the oil piece is now getting corrected, the next big piece here is real estate, is what's really dragging down the economy. And we continue to get slower and slower. Unemployment claims continue to rise. We're now up averaging into the mid 400s. Look back 6-9 months ago, we would have thought that is going to be absolutely catastrophic to have them that high. And really, again, it's not good that they continue to go higher and now are hanging in that mid 400 level. And again, with not seeing that abate, it continues to move. So with all of that, we have to see something that's going to help the housing market. Now, with them taking over Fannie and Freddie, what that did, number one, bring back investor confidence. Okay, so that right off the bat, we saw interest rates move down about a half a point, which is a massive move in a one-day time, when from what they closed on Friday to where they ended up on Monday. So you're looking at a big move in interest rates because investors were buying mortgage-backed securities. Now, if you check out truthaboutmortgagerates.com, get our special free report. It really explains how all of this stuff works, all the different terminology, and why some of these things are important, and how all this plays out. And really, that factors into what's going on with Fannie and Freddie, and that factors into what's going on in the economy, and what's happening with, and is there going to be bailouts and money that the governments have to owe, and again, taxpayers going to owe. All that starts to factor in here. So when we look at that, people finally started to buy mortgage-backed securities in a big, strong way. Because the other piece that's coming in is the Treasury said they're going to be buying billions of dollars of mortgage-backed securities. Now, they haven't started buying them yet, so obviously everybody's trying to get in ahead of that to say, here, we're going to buy it at a lower price, which means a higher rate than it will be in the future. Then once everybody else comes in and buys, along with the Treasury, then they'll be buying them at a higher price, a lower rate, and the people that already bought them can make money. So all of that means we've had lower rates. Now it means rates moving down into the fives again, on your standard 30-year fixed. Now there's stuff you see on TV advertising at low rates, but you're going to be paying more points to get that. But from looking at a standard, something without points, and you've gone into the fives. Now, the other point that we're talking about, though, is we've had this huge run-up in bond prices, again, which translates to lower rates from about the middle of August. And really, it's been pretty much a straight run-up. We haven't seen any pullbacks. And that's really what we're looking at right now. We're seeing, been in an overbought position, really expecting a pullback in rates, meaning rates will probably bump a little bit higher before making another move going forward, because we do have, again, inflation coming down, which again is the arch enemy of bonds. Again, explained all about it in our special report here, truthaboutmortgagerates.com. So looking at inflation coming down, looking at people getting more confidence in the mortgage-backed securities because now the government is backing those, along with the fact that they're going to be out buying them more. So again, anytime you have more people buying them, price on something goes up. And with mortgage rates, mortgage-backed security prices go up, rates go down. So all of that stuff coming in together means we're looking at lower rates over time here. And hopefully that's going to put a little more kick into the housing market. That's about it for now. We're going to come back early part of next week, get an idea how it's continued to play out, give you a bit more of an update, and we'll see how things continue to go. Again, we're expecting to see rates maybe move a little bit higher. We've got inflation numbers, PPI coming out tomorrow, but that's a little backward-looking information. See how things continue to go out into next week. We'll give another update, and we'll be back on our regular schedule. Probably look at least a couple of video updates every week, let you know what's happening. Again, check out truthaboutmortgagerates.com and our other site. Again, ask your mortgage meltdown question. Put your questions in there, whether it be we can notify to get notified when that is up and live, that you can ask the question, but you can put your name and email in there and say you want to be notified. We'll have that up next week, so you can ask questions about any of the stuff that's happening. There's so much going on. This is affecting everybody, homeowners, non-homeowners. It's affecting the economy. It's affecting everything. Ask your question. Check out our free report. Till next time, this is Wayne Paniello from truthaboutmortgagerates.com.